What's going on, guys? Hope everyone is having a good evening so far. Life too short. Welcome, Matthew. Welcome, Ming, Chewy. Good to see you guys. I know some of you were on the live stream this morning. Back at it. So what we're going to be doing is going over our trades in the last 2 weeks, right? So 18 trades since last Monday, and an 88.89% win rate. So 16 of those 18 have been winners. So we're going to be breaking that down and looking at those setups play out in real time, right? Perhaps looking at what we could have done better and why we avoided other setups. But feel free to treat this like a Q&A as well. If you guys have any questions, just send them into the text chat of this voice channel. But starting here with Monday, November 3rd, right? Looking at overnight price action and walking you guys through, my pre-market routine as far as how I establish a bias in a New York AM session draw. So what I always do is attach a fib from low of day to current high of day, right? Where are we on our daily range, right? Obviously, we are in a significant premium here last Monday before the open. This candle right here is 9:29 Eastern, 1 minute before they open. So I'm seeing that price is high up, right? We did have a bullish Judah swing below midnight open here. So this was our manipulation move of the day, and then distribution overnight. That said, if I'm going to be taking longs when we are this high up, I need a very obvious draw, like perhaps previous day high or something like that. But based on a simple discount and premium metric, we would be favoring shorts, right? At least, if we don't get a short, we'd be looking for some manipulation to the downside, maybe sweeping some discounted sell side before taking longs. But we certainly would not be chasing longs when we're this high up in the market. So, in a situation like this on Monday, we come into the market. I'm looking at the next candle. This is our open. What liquidity do we sweep? Where are we drawing toward? In this case, we're drawing toward high of day, right? So with a draw like that, I do want this to be swept before we take any short. I'm not going to be taking a short if price is doing something like this. If we came down and we did give an inversion to the downside to go short, I would not take that without having swept such an obvious draw like this being high of day, right? So let's play it again. This is 1 minute into the open. Let's see what we get. You see here on this candle, this is our sweep. High of day has been swept. So now I am really focused on looking for short entries. And then, that's the only thing I'm looking for right now, right? So we've just made a new high of day. We're in a deep premium, obviously. We have discounted sell side liquidity here, right? All of these lows. This is ultimately what I'm looking at. So I'm going to be looking for shorts toward our corresponding draw. So we mark out what bullish fair value gaps are holding in the market. You see we have one here, and then a couple more just below, right? So we'll just mark them all out like this. Play forward. We're looking for a reaction to this sweep. I don't want to see displacement above this previous swing high. Otherwise, that would lead me to believe that this might be a liquidity run and not just a sweep in which we would get that reversal. So playing it forward a bit more. Still sweeping, not really closing above. Now, on this candle here, this is 4 minutes into the open. We closed below one bullish fair value gap, but we didn't close below these other two. We've tapped and respected these other two bullish gaps, so this is not a short for me just yet. I don't take trades, if we're in a conflicting open fair value gap. In this case, if I'm looking for a short, but we're in two bullish gaps, I'm not taking any entry here. Playing it forward a bit more. This is finally when we get our close, right? All three of these 1 minute bullish gaps have now been closed below, and this is a valid short entry. Not only that, but if you guys have read our order block scalping guide, which is free, we've just turned this entire segment here into a bearish order block, right? So all of these up close candles, they've now been displaced below, they've been closed below, and their corresponding bullish gaps have also been inversed. So this is a high probability short, especially understanding that higher time frame narrative here was a high of day sweep and all of that discounted sell side, like I mentioned. So if we sell short here, we're targeting some internal swing low. I am always looking for low hanging fruit. I would rather secure the win, on a swing low like this rather than trying to hold it till down here and then mess up my trailing drawdown, stuff like that. But a very simple short like this, right? We sell. This was our first trade on Monday, and then we let the trade play out. We're looking to take profit at these lows. Stop within these 1 minute order blocks, high of displacement candle, and then we just let the trade play out. You see this was a great winner, right? No drawdown at all. Price did come up and nearly tap the inversion edge, but this was a BPR, as in bearish fair value gap on top of a bullish fair value gap. So a balanced price range, you know, not to get too technical, but it shouldn't be retraced to. And we see this was a winning trade. So this was our first trade on Monday of last week, right? Phenomenal trade there. And that kind of shapes out, how I use that pre-market bias in correspondence with, that lower time frame precision. If we hadn't, if we had tapped this lower 1 minute here, this gap here, I wouldn't have taken that short, plain and simple. But we didn't tap it on this close, so this is still a valid short for me. And we're targeting these internal swing lows. You'll see that price did eventually come down and take out all of this sell side liquidity as well, being that it was discounted. So that's a complete walkthrough of a trade from higher time frame analysis down to the open, right? What I'm expecting at the open. In this case, it was a high of day sweep, and then getting that entry, right? It's always good when analysis and execution line up on the entry side, because sometimes we'll have that perfect analysis, and the market will distribute to our draw, but we just don't get an entry, which is fine. But, in a situation like this, we did indeed get the entry there. If you guys have any questions, again, treat this like a Q&A as well, giving you guys my time to ask whatever questions you might have. I'm going to mute. I'm going to put voice on mute for members. That way everyone can hear me clearly, and then just type in the text channel any questions you do have. So I'll pause right here. I see a couple of you guys typing. We will wait until I respond to you to move forward. Again, we're back testing and looking at all of our trades over the last 2 weeks. Why not secure partials and break even and then let runners run? Mainly because of trailing drawdown, right? With these prop firms, our drawdown follows our open profit. And this is more than enough. I mean, this is like 20 something points. With 1 mini, that's $400. If I'm trading 2 minis, that's 800. So that's more than enough for me. If you decide to take our strategy and mold it into more of a holding system, that's fine. Hold a runner and maybe trail your stop, but I would trail your stop in profit. I wouldn't just leave it at break even, because let's say price comes down. So this was like a 30-point trade. Let's say price comes down 20 points and then reverses back to your break even and you get stopped out. Sure, you didn't lose any money on your P&L on your equity, but you lost $400 in drawdown if you're trading a mini. So that's why I like to secure profit and trail my stop in profit, which we actually did today on one of our trades. On this candle, I did wait for a little bit of a retracement because, we did close relatively low, right? So, like I said, we came up and nearly tapped the inversion edge. That was the entry, right? Knowing that this was a BPR. So yeah, did wait for a bit of a retracement there. Good question. Even though it didn't tap this FBG, right? Still consider that high probability. Yeah, I think I answered your question, Ming. Let me know if I, left any confusion there, but okay, cool. Good questions, guys. Keep asking them as we go through this. So that was our first trade on Monday. Last Monday, we did take 4 trades, so it was a higher volume trading day. But we'll go over, the big ones where I think there's a lot of learning opportunity. So let me scroll back a bit here. Yeah, one other trade we had was a little later in the day. It was around 10:22 Eastern. It was a 30-second inversion short. I'll pull up the 1 minute for context. I think it was shortly after this. It was somewhere in this range, I believe. So I think it was right here. we just tapped our 1 minute bearish gap, right? So this little range here, obviously bearish trend had been established in the market. We had tapped this 1 minute bearish gap and gave a 30-second inversion. We caught a short right here. This was, and I'll pull up the picture of executions. Yeah, so it was right here. Sold short at about 9.5, took profit at about 8.2, so 13 points. But you see that 1 minute rejection, right? Tapping into this fresh bearish 1 minute gap, rejecting it. And then we get a close below not only this 30-second bullish gap, but also form a 30-second bearish order block, right? And took profit within 30 seconds on that trade. So that was Monday of last week. Now looking at Tuesday was 2 out of 3. So we took 1 loss and had 2 winners on Tuesday the 4th. We'll fast forward to that day here. And same thing, I'll walk you guys through my pre-market analysis process, right? You guys get my outlooks every morning, whether or not you're free or a premium member. Everyone has access to my morning outlook. But the reasoning behind that is what I'll break down as well right now. Okay, so this is pre-market Tuesday. Here's what I'm seeing. 15-minute is always that bellwether time frame. Just easy to see everything. Overnight, a lot of consolidation, right? No big moves during the London session, just back and forth, choppy price action. And that is a result of a big move in Asia, right? So Asia opened up right here, sold off, let's see, 26.1, close to 400 points, 350 points, and then London opened up. We obviously have all of these highs here on the 15. There we go. So, as far as what liquidity has been swept, we're currently in this new week opening gap from last week. So keeping that in mind, although we are low on the day, we do have a new week opening gap that hasn't been all the way filled. It's just been partially filled. So, on a day like this, what I would like to see is manipulation up, sweep these highs, tap into fresh hourly gaps, stuff like that, and then distribution lower. But either way, it really depends which comes first. Do we manipulate up first or do we manipulate down first? And then the draw is just going to be the opposite of that move. JIS, yeah, this is being recorded. So jumping on to 1 minute, this next candle is the open. So we're looking to see, where do we go first? Obviously, you see these relative highs here. This is where my eyes are instantly drawn to, and then some more up there. But we do have that new week opening gap below, right? So this is low of day. Mark that out. Okay, this is the open here. Just a little bit of a wick, tapping some fresh fair value gaps. Not much going on. Drawing down, drawing down. Okay, now we're pretty certain that low of day is our draw. Right, no short opportunities here. We've closed below all of this liquidity. So we didn't get any clean inversion just yet. Rejecting this 1 minute bearish gap. We do see a bit of a reversal here. No trade. We tap this upper. Right back down, fully rebalanced. Okay, coming up. So we swept relative lows, didn't sweep low of day. So now this is, some more sell stops being placed in the market just above our low of day. Drawing up toward these relative highs, swept here. So we took our first trade right up here. Actually, I believe, so Tuesday, 2 out of 3. We took a short down here. It got stopped. Right, low of day draw. We had a 30-second inversion here after rejecting a 1 minute bearish gap. That's still an A+ trade, right? We were traced into a premium of our New York range, rejected this upper 1 minute here on this candle, got a 30-second inversion. This was a good trade. It just so happened to be a stop out, right? So that is one of our 2 losses in the last 2 weeks. But the following trade was right here. Our second trade on Tuesday was a long up here. We had built up some trendline liquidity here. Okay. We were respecting, let me draw it out, respecting this bullish 1 minute gap. So this was our PD array for upside delivery, right? A reason for price to bounce out of this. And then we obviously had this clear relative equal high draw on liquidity. So we took a 30-second inversion in this segment, which I will show you guys now here. These were our executions last Tuesday. So you see, here's this 1 minute gap. Obviously we dug down. This is it on a 30-second. We close above this bearish gap on the 30. By that close, I got in a little bit late, missed about 2 points, but bought that close, and then we sell at New York high of day just before these relative equal highs. So phenomenal trade here, almost 20 points straight to the upside, and took profit on that in less than a minute. So that was our second trade on Tuesday, right? Using those higher time frame relative highs here, we have that confirmation of an uptrend. We get our retracement, we get our inversion back up. That's how we play trends, right? We're not just buying closes at the top. We're waiting for these retracements. We're waiting for, in this case, a bullish Fair Value Gap to be respected. And then we want to see a reaction out of that. Okay, so these relative highs in combination with this little bit of trendline liquidity made for a phenomenal upside draw. Tuesday, we took one more trade down here. This was another 30-second bullish inversion. This was at 10:24 Eastern, so shortly after this. Clear some of these drawings. If you guys have questions, again, I have the chat open. Send them in, feel free. So you see here, we begin to retrace, right? Obviously, bullish trend in the market. We do have some highs back here. Now, again, similar situation to down here. We're retracing into bullish 1 minute fair value gaps and respecting them. So we'll mark this out here. Shortly after this, a couple minutes later, we get a quick wick down. Boom, here we go. So we tap this fresh 1 minute down here, come out of it, and in this segment is where we had a bearish 30-second gap get inversed. Now, this trade is a great example of stop placement. Some people took this trade, if they weren't on stream, but they know what to look for. They took this trade and got stopped out. So they took a winning trade that was, a winning trade for us on stream. It was a loser because they didn't have proper stop placement. In this trade, I marked out live on stream the fact that we formed a 1 minute order block here, and I put my stop at the mean threshold of this last down close candle. Mean threshold is just halfway of an order block body. So I was in at this close, right? I'm targeting buy side liquidity. I was targeting these swing highs here, right? And my stop is mean threshold of this order block. So 1.16 risk reward, still really solid, right? We buy this close like that. Watch how the stop placement held. Some people, if they don't understand stop placement, they had it at the low of this displacement candle, thinking, well, this is the candle that gave the inversion. That's where I'll put my stop. But you'll see shortly that that was not sufficient. So we come down, right? Just consolidating a little bit, coming up, coming down, a little bit of chop. Notice so it went to profit, but if you had trailed your stop and even just had it at this swing low, you would have been stopped, right? We never formed a new high, so there was no reason to trail your stop. This order block was being stabbed into and holding all of these wicks here, right? You see this last down close candle, it was holding these wicks, and that's all price really needed to sort of trampoline out of this consolidation range and make that high there. And that was a successful third trade on Tuesday. Here are the executions for that trade. Boom, as you can see, order block mean threshold stop hold, order block mean threshold stop placement. Bought that, took profit on it. Phenomenal way to end Tuesday. Yeah, good question, Simon. Deciphering between a retracement entry versus off the close. That really comes down to what's your risk to reward going to be. If it's around 1-to-1, I'm going to take it at the close. If it's significantly less, like, let's say we close, hypothetically, if this is our range in a trade, right? Let's say we're targeting this swing high. We come down, we form a low in the market, and then we close up here. Okay, so just pretend these are candles for simplicity's sake. I'm not going to buy this close, target this high, and put my stop down here. Instead, I'm going to wait for a retracement to justify my risk reward. If my stop does need to be at the swing low, that's where I'm going to put it. So I'm going to wait for a retracement to maybe 0.88 risk reward. That's fine for me. I will risk 18 points to make 16. With an 89% win rate, that is more than enough. But if it's something like this, I'm not going to be risking 23 points to only make 12. So it all comes down to where's your TP at and where's your stop. And where does your stop need to be at, right? Not in this example. Yes, you could just buy the close, target those highs and have a tighter stop. But the problem with doing something like this is you might just get stopped out. You know, we want to be entering where most people are getting stopped out. So if we're waiting for that retracement and we enter here, that's great. That suits our risk reward, right? But a lot of people would be stopped out if they're just doing some sort of fixed stop placement like this. This is why I don't take trades and make stops out of thin air, because you could turn what would be a winning trade for us, having waited for a retracement, into a losing trade, and that's where you really start to mess up your probability set. I'm going to post this recording to YouTube, so it'll be up on YouTube. So that was Tuesday. Again, 2 out of 3 on Tuesday, and then 3 out of 4 last Monday. Moving on to Wednesday, the 6th or the 5th, I believe. Again, all of these executions are in our trades channel, so you can go back and study them, and some of them are marked up with some annotations with higher time frame confluence. Okay, coming into the day on Wednesday, this is what we looked like overnight. This was our midnight open. We spent some time consolidating. We dropped below, tapped some fresh higher time frame bullish gaps, and began distributing to the upside. So we're opening near high of day on Wednesday. So I was looking for some shorts based on that basic discount and premium again. And this is what we got. So our first trade was actually a 30-second inversion, which you'll see shortly. And it was actually right at the open. This was one of those quick trading days. This is not the open. I'll tell you when we have our opening candle. Okay, boom. This is the open. You see we come up pretty quickly. We tap 2 1-minute bearish fair value gaps, and we failed to close above this upper gap. So a little bit of a buy-side sweep here in the market, right? Failure to close above, so no bullish inversion there. And we did leave some relative lows. So New York low, at the open, this was our opening low. It did not sweep this last low. So I'm watching those very closely. You see on the next candle, this happens, right? A complete 180 reversal, taking out these lows. Fortunately, this is the benefit of trading the 30-second, right? We're able to catch these moves, whereas on the 1 minute, there's no entry. But if we look at the 30-second, this is how we caught this. Boom, here we go. So on that first opening candle in which price flew up, right? We left these relative lows, moved to the upside. We created a bullish 30-second gap here, okay? This is where my eyes went to for shorts. We closed below it here. I sold at the close. Not worth waiting for a retracement on this trade because we had already gone up so much. We had achieved that manipulation move on that first opening candle, came down, sold at close, and bought back at those lows. Got about 14 points on this trade to start Wednesday. So phenomenal trade. It did happen quickly. I think this is probably the quickest we've taken a trade on stream. It was within a minute of the open, and that's just how the dice rolled that day. It was a great trade. So that was our first trade on Wednesday. We took another trade shortly after. This was a great trade to study. You'll see it here in a second. So you see price comes back down again on this candle here. We're looking for a bearish gap to form, right? We do still have some relative highs up here in the market. So now that we've caught our short, I'm looking at, okay, what are we sweeping? Do we have an opportunity to go long? Now, your eyes should be drawn to these lows as well, which we end up sweeping on this candle here. we get that wick reaction. Anytime we wick below or above liquidity and then close, strong like this, I'm anticipating some sort of a bounce, right? And in this case, we did indeed get our bearish fair value gap to form. So now what do I want? I want to close above that. Let's see the next candle. Not quite. But finally on this candle, bingo, here is our bullish inversion. And this is our confirmation, right? I'm not trying to buy this low. I'm not trying to, as soon as we sweep liquidity, I'm not chasing along. I'm waiting for confirmation, which I got here. Now, what do we have to target? We have these relative highs, like I said, at high of day. Okay. So obvious liquidity up there. Then we also have New York high right here in the form of, 2 1-minute highs. So relative highs there on the 1 minute. Phenomenal trade here. Bought this close. I got out a little bit early. I got out at this internal swing high. Again, 20 points. That's more than enough for me. And then my stop on this trade was just within this 1 minute order block. You see, we buy this close. Let the trade play out and getting close. Boom, and there's our exit. Phenomenal. Great trade there. So we caught the short on the way down after price manipulated up. Right, we had sell side here. And then we waited for confirmation, caught the long right back up there. This was last Wednesday, 2 for 2. And then if we look at the 5 minute, I'll show you guys our executions, but also, what the 5 and 15 look like. Keep in mind, right now we're only back testing a 1 minute chart, just for the sake of this session. TradingView doesn't let you back test multiple time frames. But, in real time, I'm looking at all of these charts here on the left, the 4 hour, the 1 hour, the daily, ES, and then I'm looking at the 15, the 5, the 1, and the 30. So about 8 time frames that I'm monitoring and narrating my thoughts on. This is what price looked like at the time of our entry last week. Okay, so here is our daily range. Like I said, every morning I mark out our daily high, our daily low, and I want to know where's our discount, where's our premium. Basic math, I want to be buying low and selling high. Before this trade, prior to this long, we were in a premium, and then we had come down and tapped our discount range. Okay, everyone sees that on the 15-minute, right? We tapped our discount range. We tapped this fresh 15-minute gap there. I know it's a little hard to see. I'll blow it up. But look at this chart here. We had tapped a fresh 15-minute gap, and we had tapped daily discount. 2 major bullish confluences for longs, right? And then we had swept those relative lows that I just annotated. Yeah, Fitbull, sure. Give me a suggestion. So great trade there. Bought that close, got that delivery to the upside. So 2 for 2 on Wednesday. And then you see here we had taken out our relative highs. But this is why I scalp. This is why I scalp. Look, we were out in profit. Okay, we had fully exited our longs before this massive retracement here. So from this high down here, 60 points of a retracement, that is not what my brain likes. I don't want to be in profit and then have a trade go against me 60 points just because I'm holding to such a substantial high. Draw on liquidity is just that. It's a draw. It's like a magnet pulling price. It doesn't mean I need to be getting out at the draw. That is just where we're being pulled towards. Fitbull says, don't aim the high of New York, but the actual open time. Yeah, I know what you mean. So just marking out 8:30 or 9:30 open. I used to pay a lot more attention to midnight open, to New York open, to Asia open. All of that is somewhat unnecessary for me. It's good confluence and it adds to confidence, and if that's something you personally enjoy, go for it. But in this trade, New York high was up here. That was my draw. I exited at internal liquidity. Great trade. I'm personally not looking to add anything to my system anymore. I've spent years kind of refining it and cutting away all the fluff. But yeah, no, this was the open. It was not this candle. I see what you mean here, though. This would be a little bit more obvious, but this was a minute after. But I do see what you mean. This is a rejection block. We rejected those wicks. And, I think we have a similar thinking here where sometimes I will get out at wicks rather than the actual high or low, just to avoid relative highs or relative lows forming while I'm actually in a trade. So that was Wednesday. Yeah, I appreciate it, man. If anyone has questions, let me know. Otherwise, moving on to Thursday the 6th. Yeah, so you see here 3 trades. Great P&L just using 1 mini, right? So if you guys are using bigger accounts, 2, 3 minis, you can see the power of this strategy. All right, Wednesday the 6th. Let's jump to it. Excuse me, Thursday the 6th. Jack asks, when I'm on a fresh funded account, do I start with 1 mini to scale up and build a buffer? It depends what size. If it's a 50K account, yeah, 1 or 2, but I would not recommend, if you've been trading for less than 2 years, if you don't have a strategy mastered, to trade 2 minis on a 50K account. That's way too big. 1 mini per about $2,000 of drawdown is good, in my opinion. That's safe when you're trading this strategy, because our stop outs, when we do have those infrequent stop outs, it's going to be maybe 15 points. That's about $300 with a mini. Very hard to blow an account when you're trading responsibly and you are abiding by that sizing to ratio. 2 minis is what I trade usually on 150Ks, 2 to 3. On a 50K, I'm trading 1. Very seldomly I trade 2 minis on a 50. But for risk management purposes and what I can recommend to you guys wanting to keep your accounts alive, don't trade more than 1 mini on a 50K. But, if you have the experience and you want to get to a payout faster, which is never really good, you're kind of rushing it and just being greedy. But if you feel like your time is worth more than that, then you do you. But what I advise is 1. Yeah, exactly, Joe. You know how it goes when you're trading too big. It's not a sprint. There's 20 trading days in a month. If you made $150 a day for those 20 trading days, you would secure a payout every month on a 50K account. If you have 5, 10, 20 accounts, you see the power of copy trading and you see the power of consistency. Yeah, that's another great point. It is a lot easier to go on tilt when you take outsized losses. If you generally are only trading 1 mini and then you just so happen to trade 2 and it ends up being a stop out, again, you're just messing up your data set and, priming yourself for tilt. All right, so Thursday. Thursday was phenomenal. This was the day we had that like $1,500 trade. When you add and we were trading 1 mini, should we add? No, I would not. I would not do that. I do not. I'm doing what I'm doing because of my position on my accounts. I have, if I'm adding, I generally have a huge buffer, or it's a, it's a special situation. But don't. I would not trade more than 1 mini per $2,000 of drawdown. All right, so here is Thursday. Let's go back to our trades. We had 2 trades this day. Both were shorts. Both were phenomenal shorts. You see we have these relative lows down here in the market, and then we have an obvious swing low just below that, right? So I'm marking out obvious liquidity. We've continually swept highs overnight. Okay, so this is high resistance. We've to build up to this high, we were sweeping highs, okay, and we're rejecting old fair value gaps. So I'm looking at where is price headed right now, and where is resting liquidity. Very obvious relative lows here. So let's look at the open here on Thursday. Selling off, as you can see, rejecting this 1 minute gap. Coming back up. Watch closely. We have this freshly formed 1 minute bearish gap, which we did not close above, right? And we came so close to these relative lows. So now I know that the market is just engineering sell side liquidity. These are 1 billion% going to get hit. Obviously not a billion percent. You can never be certain, but very obvious draw here. We come down. We do sweep these lows on this next candle. Okay, that's okay. We didn't get an entry. That is okay. I'm not chasing. You see here we reverse. Okay, where do we come back up to? We come back to the same bearish 1 minute gap that was holding. Okay, so bearish PD array that's been proven to send price lower. We've just come back up to it. We've created, yet again, very obvious relative lows here. Okay, this swing low was like a 4-hour swing low. Very obvious. Now, what did price do? We just created a swing low a little bit higher. So now we have like 4-hour relative lows. Okay, these are not going to last. And you'll see shortly there was no bullish 1 minute here. 1 minute did a full rebalance. But on this close here, we got a 30-second inversion. So the 30-second gap looked like this. It was something like this. We sold short at this close, right? Stop on this candle at the displacement candle high, allowing price to tap this upper 1 minute again if it wanted to. And then we're looking to TP at this fresh, this was actually a 4-hour fresh fair value gap. So this is where we're looking to exit our shorts. So we're selling here, right? Great risk reward for our strategy. Okay, anyway, and then we just let it play out. This is how the trade plays out. Boom. Complete decimation down there. Oh, that's annoying. Let me cut that out. Let me redo that just for the sake of P&L on this backtesting session. So we're selling here, right, at the close. Boom, boom. Complete sell-off. We have tapped our 4-hour fair value gap, and we've taken out these relative lows. Great trade, right? Very obvious draw. Relative lows, relative highs. Always obvious draws on liquidity, and we were able to get a 30-second inversion short to that draw. Phenomenal. Our second trade was shortly after, noting that, you know, when we rejected this bearish 1 minute gap for the second time, we didn't sweep this high. That's fine as far as delivery goes, but, you know, when we come back up and we want to sweep liquidity, these are an obvious place for buy stops to be. So I have these marked out. Right, shortly after that, we do indeed come back up and sweep those highs. This is when we go short. Okay, so we've swept these same 1 minute relative highs. We have our low of day down here, and most importantly, this was not a clean swing low. What do we have? We have 3 candles on consolidation, each with higher lows. This is trendline liquidity. Okay, consecutively higher lows in the market, right? You see the little, hence the name, trend line. So very obvious place for sell stops to be stacked on top of each other. Selling this close, and I think we were actually in a little bit before when the 30-second gave an inversion. But anyway, selling this close, targeting these lows. Stop can be, you know, just above this order block, allowing price to tap that. This is what the trade looks like. This is the trade that was hugely successful. And you see that here. Beautiful delivery. You know, in about 2 minutes, price sold off 60 points, right? This is a trade that, you know, we made $1,400 per account on. Great, great execution. Would I take a trade if it came down fast and swept liquidity, but because of how fast it came down, left multiple? Oh my gosh, with the spacing. I'm going to have to reread your question in a second, Joe. JIS, good question about this bullish 1 minute. So the way I played this, which I will show you here, was an entry. But this was a retracement worthy entry. So my first entry was on a bit of a retracement here. And then I added, you know, as price came back up, right? Because we did move quite a bit from this high 670 down to 630, 40 points in a minute. So I wanted a bit better of an entry. So my average entry was like 486. I took contracts off at, excuse me, what was my average entry? Average of about 642. I'm looking at the wrong scale. And I took my first partials down here at about 626 for 16 or so points. And then I left a runner and sold, well, bought back to cover my short just before this trendline liquidity. So on my runner, that was a total of about 40 points right there. But that's how we navigate that fresh 1 minute. So just entering on a retracement, taking partials at the fresh 1 minute, because this is a huge range. It's just a wick on the 1 minute, but you know, this retraced 24 points, right? So average entry up here, getting out for 16 points here in partials, and then letting our draw be hit and taking profit down there. So that was That was Thursday, the 2 shorts we took, right? One here, one here. And you see the executions. Joe, so your question, would I take a trade if it came down fast and swept liquidity? Got it. But because of how fast it came down, it left multiple 1-minute fair value gaps. Okay. But the spacing, yeah, that's a good question. I would take that trade. I would take, FVG to FVG trade. So something like this. So this is what you're saying here. Like, okay, come up, come down quickly, form multiple 1-minute gaps. And let's say we get a close like this. So let's say we have 2 1-minute gaps, right? One here that we get a close above, and then one here. This is 100% a trade I would take. If the higher time frame narrative is bullish, I would 100% take this trade and exit at this upper 1-minute gap. So I'd be buying this close, right? Targeting this upper gap, putting my stop at, probably the low of this displacement candle, 1-to-1 risk reward, and I would be all out at this upper 1 minute. As long as there's enough room between the 2 fair value gaps, I will always take a trade like that. Yeah, exactly. Making sure that the RR is there. Now, if we had closed like this, I would need a big retracement. I would put my retracement entry in the market, down here. If it doesn't get filled, it doesn't get filled. When I add, do I move my stop or do I just leave it? I leave my stop where it is. But ultimately, if this is where I decide my stop needs to be within this 1-minute order block, that's where it's going to remain. So, my first entry was here, something like that. It's a little bit higher, actually. It was like 640. Second entry up here, 645, 648. My average is in between these 2 lines. My stop is going to remain where it is. But adding is just something, if you're trading a bigger count, if you're trading a 150K, okay, take your first entry. And if you get the better entry, you can add. But again, you need enough drawdown to be able to do that. That was Thursday, 2 for 2, just like Wednesday. Friday was a day we only took 1 trade. Jumping to that. Okay, Friday we are obviously near low of day, right? Overnight price action, we had a Judas swing above midnight open. If you don't know what a Judas swing is, it's just manipulation on a higher time frame opening candle. So midnight open here, right? Manipulate above, distribute lower, and then we have these relative lows down here going into the open, right? All of these lows in the market. So we had our only trade on Friday was a bullish 30-second inversion, which was about 13 minutes into the open. So okay, so we were targeting this 1-minute bearish gap here. Okay, and it was here where we had our 30-second bullish inversion, got in on a bit of a retracement, targeted this upper 1-minute gap, and had a stop down somewhere at these wicks. You see here, took profit on that trade. I don't have a 30-second chart of this execution, but imagine a bearish 30-second gap here, close above, take that long, target that fresh 1 minute. Right, so this is an example of targeting a fresh, recently formed fair value gap. That was Friday. For the trades we've taken this week, I'm going to go through them a bit quicker, being that they're fresh on the mind still. But if we look and we look at our trades this week, right? So these were 30-second trades on Monday, 30-second inversions. We had shorts here, took profit at this internal low, and then right afterward, shortly afterward, price gave a 30-second long, took profit there, right? So closed below this 1-minute gap, got in our a retracement, took profit at this low, and capitalized on this retracement. Then after that, got a 30-second long back in the original trend and executed there. This trade on Tuesday was phenomenal. This was a 30-second inversion. We had swept New York high once, kind of consolidated, came down here, did not take out these lows. This was the key factor in this trade. Didn't take out these lows, had some trendline liquidity, came back up, swept New York high again, and then we got our confirmation here via a 30-second inversion. So there's a 30-second bullish gap right here in the market. Closed below that, got in, and got out at these lows, right? Very obvious when the market does this, okay? Builds some liquidity, sweeps some opposing liquidity, gives an entry toward that engineered sell side in this case. Love taking a trade like that. That was on Tuesday. Wednesday, this was yesterday. Had to exercise a lot of patience, but it paid off, right? This has been a no news week, so we're just waiting for obvious trades to come, not chasing, right? And I've been very picky with my entries this week. Bearish 1 minute gap, get a 30-second inversion, short that. We have lows down here. This was low of day right down here. So we took a short right there. And then today, 2 out of 2, again, no losses. Beautiful trade here. 1 minute, we had just come down. This was low of day. Inverse this 1 minute bullish gap. Took that on the close. Got about 17 points of profit there. Phenomenal trade. Second trade. So there's a bit more context here marked up on the chart. Daily high is up above, not pictured in this trade, but this is equilibrium. Excuse me, not daily high, but New York high. And then New York range equilibrium here and New York low. So what's happened? Prices come down. It's reversed. It's tapped into a fresh 1 minute bearish gap. We're in a premium now of our New York range. We get a new 15-minute open on this candle. We come up. We do not sweep this high. This was SMT with ES, and it's one of the only times I'll use ES is just SMT like this. ES actually made a new high here, whereas NQ did not. This was SMT. This is our higher time frame bearish delivery. So New York premium, number 1. Number 2, fresh 1 minute bearish gap. Number 3, SMT with ES. 3 confluences for a sell-off. We do indeed get that sell-off. We get a close below this 1 minute. I'm targeting these 30-second equal lows. 20 points bagged and tagged right there. Stop at the high of this displacement candle. And that was it. That's how we are currently sitting on the week, right? No losses this week. Over the last 18 trades, 16 have been winners, which you guys just saw. So about 50 minutes breaking down the last 2 weeks of trading for us. Hopefully some value to you guys. If you have any questions, let me know right now before we hop off. Obviously, tomorrow's Friday. Again, I actually don't know if we ended up getting some news for the week or not. Let's see. Yeah, still no news this week, unfortunately. So tomorrow, going to remain picky. Going to be protecting profits, right? If you're a free member, and this strategy is interesting to you, seeing it broken down, feel free to join us tomorrow. Live trading, you can sign up for a trial, no obligation, cancel anytime. JIS asks, so when a candle inverses a fair value gap and then immediately inverses back up, the trade is still valid. Talking about the last trade. You're talking about this trade or one prior? You're talking about which one are you talking about? As far as like back-to-back inversions go, it just depends on the context. What are we delivering from? So in this case, we have 3 bearish delivery arrays, right? And then we had 30-second equal lows where we exited at. So that's our exit there. If you're talking about, let's see, if you're talking about this trade, yeah, this is more scalping, right? We closed below this small 1 minute gap, got a retracement entry, got our exit. On a trade like this, where we're kind of shorting the retracement as it's happening, I'm being very quick and nimble, right? And then we get our long back in the original trend. But that, that's the beauty of scalping, as long as we have some draw and some confluence, right? So that's where we'll call it for today, guys. Again, free trial is on the table. If you guys want to join us trading tomorrow. So, okay, you're asking the last trade today, we inversed down, then came back over the FEG and finally dropped. Inversed down, came back. Oh, you're saying here. I believe this is what you're saying. So we inverse below this 1 minute gap, come back up, close above that inversion, and then come back down. This doesn't matter to me. What matters to me is that context, right? Higher time frame context there. I don't care about what happens once I'm in the trade as far as, the fact is that the inversion occurred. The rest of this is just noise and a delay in delivery. Cool. Glad I answered that question. All right. Hope you guys enjoyed this class. It'll be up on YouTube. I hope to see some new faces in the live trading stream tomorrow. Looking to keep it up. Otherwise, have a great night. Feel free to DM me any questions you guys might have, and we'll talk later. Bye-bye.